Alrighty, just hit the go live button. Hello, 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 everybody, and good morning. Good morning. I'm gonna try and do these streams at a regular time, somewhere between 4:30, 5 a.m. Pacific, and that should come down to 7:30, 8 a.m. Eastern on the US. I'm gonna try and do these streams every day around that time. And man, I'll tell you what, I feel pretty good this morning. Getting up so early, having all my food ready. I got my tea here. I got to read some more research that came down my inbox. And I also got to watch a re-upload of a video called The Red Eclipse. I posted it in the off-topic section on the Discord. Link to that's in the description. Join the Plan the Profit Discord. Do some trade plans with other members of the community and share your own trade plans. Get feedback on it. But in the off-topic channel, there's this great animation called The Red Eclipse. Highly, highly, highly recommend it. But if you don't like blood and gore, because there's some pretty gory fighting in it, just only watch until they start playing "Hit the Road Jack," the song, and then it's fine. But it's quite a cool animation. I enjoyed it quite a lot. Let's get into the charts, my guys. Let's get right on into the charts. And good to see you guys in here, Leon, Helios, right? Nice to see you guys. It's afternoon in Greece, all right. So this is a perfect time for you. Perfect time for you. Let's go ahead and check out our indices. Right here off the bat, I have the ES. And, well, 50-50, roughly you could say 50 to 56, 57% of the time, your top for the current trading day occurs somewhere below this R1 pivot. Yeah, it's kind of like somewhere between 50 to 60% of the time, your top for the current trading day on equities, for the ES, that is, comes in right now below this R1. And that makes sense when you're trying to think about things based off pivot points. Because if we're not anticipating a lot of volatility today, and we're not, we shouldn't be going past that R1 pivot unless we have a nice, steady, positive drift. Man, this is some good stuff. As far as the downside, if I'm reading this correctly, only about 1% of the time. Yeah, call it. If I actually unhide this, yeah, it's roughly 2% of the time your low for the day comes in just above the daily central pivot. So I'd be careful having the expectation that right now is the low of the day. As far as where we will end up, let me just increase the look back here, because all those other ones are set to 5,000 as well. Just have some consistency throughout all the settings. Let it reload. Alrighty. So below this price right here, wow, it's like 83% of the time your close for the day is below this R1 pivot point. 83%. So somewhere between 80 to 85% probability, because the reason why I give those ranges, right, like 50 to 55, 80 to 85, is because this histogram, these statistics, are being updated every single time the bar updates in real time. So as there's new information coming in, it's regenerating the probability distribution, taking the last 5,000 bars, creating a distribution, and then sampling from that distribution 5,000 times, and telling you, okay, if we just are constantly resampling the same distribution, are we seeing it converge to the same shape? Because sometimes if you have, if you're not sampling enough, you can actually get different shapes. So this is a good way of visually seeing, like, oh yeah, every single time we're simulating these statistics, the shape of this histogram is coming out to be roughly the same. So we know that we're sampling enough times from the distribution. Alrighty. Da, 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 da. I got that song stuck in my head. Hit the road, Jack. Don't you come back. From the little animation, man. I hope they make more of those types of videos. And I think I'll focus on mostly looking at these closing probabilities where we'll likely end for the trading day. So most of the time, you end the trading day around this S0.5 pivot. Now, don't get me wrong, things are still quite bullish on the indices. I mean, you can see most of the stuff is green, TLT is down. The FTSE is pretty flat right now on the day. You can see this is where we opened and this is where we're at. So we're, the FTSE's kind of holding in there. The FTSE actually has some room to move a bit higher, I think. About 66, 65 to 70% of the time, your close is above the current price. So I see some hope of a little bit of a rebound. Maybe the FTSE got a little hit too hard this morning, but it likely topped out for the day. Yeah, it likely topped out. And while it certainly could fall further, I'd wait for it to crack this low again before putting a super hard commitment behind anticipating you'd go way, way down. Let's see here. The stocks, SX5E. Let's see how that's turning out. So this isn't a futures. This is an actual index. Let's go ahead and bring it up on a 30-minute, just so that then we have more granular data, because that chart kind of gets a bit squished. Wow, you do not come up here all that often, but that would have been a pretty nice short, right? I mean, what? You only go past, past this R2, only 80% of your highs are past here, and then you got your tail risks past this R3 pivot. So this isn't the worst idea in the world to take a short there, anticipating that you don't go past R3. And this is actually called, it's a different trade bias called a chicken bias. And it's called chicken bias because it's like playing a game of chicken with prize. I believe it's called chicken bullish, where you're buying at the crack of this R2, and you're taking it and exiting your trade right there. So this is what you call a chicken bias, where you're buying into some incredibly heavy momentum and you're putting your stop just right there, and your target is just immediately, it's effectively like a one-to-one risk to reward pivot bias trade setup. And I know someone was actually just asking me what this particular bias was a day or two ago. This is exactly, this is exactly a scenario where if you're already anticipating this ahead of time, that's the main thing with a lot of these pivot bias setups, is that you have to anticipate which bias to use ahead of time. And, I'd argue that most of the time, people can't anticipate what bias to use just using the pivot points alone. And that's why you have to inform yourself with trade research and some statistics, which is how I inform my pivot bias selection. Although as I've become more and more advanced, I've used pivot bias selection less and less. However, as a starting tool to figure out, okay, here's how I should maybe try to express a bias, it's not the worst, way to go. And there's a lot of different tools within Wayne's pivots that you certainly can use to try and help bias yourself. As far as the stocks and any further downside, it doesn't look like our low odds are loading for whatever reason. Let's see here, because I really want these things to load. Oh yeah, there's actually quite a decent amount of probabilities that your low is in for the day, believe it or not. So I'd be on the more cautious side. Maybe I need to reduce the sample size here. Maybe it's getting some like really exogenous shocks from a while ago and causing it to be so skewed like that from a while ago. No, it doesn't seem like that's a sampling thing. Alrighty. Let's move on to the next one. How about that? Let's do the NQ. Oh, I know a lot of you guys are looking at NQ right now. And maybe we'll check out Tesla and Apple at the minimum as individual equities. So the top for the day is probably in on NQ. I'd say once you start getting closer, if you break this high again, it's kind of the same situation with the ES chart. If you're breaking relative highs or lows that were made in the last 4 hours, it's a sign you're likely going to go up maybe another at least 50 points. So I'd watch if this high gets cracked, and also if this low got cracked, because if this low got cracked, I'd at least anticipate to see 14.7 on the NQ. 14.7 still not out of the question. But considering how low the volatility has been just on today, unless once market opens, the volatility just comes in crazy hot, which I'm not anticipating. Look, I'm not anticipating a lot of volatility today or tomorrow pre-US CPI. I'm effectively anticipating that markets are going to have more of a neutral, flat expectation, which is one of the reasons why I'm anticipating the top, at least on a lot of these equities, or the bottom on a lot of these equity futures, is probably in. Because I think that, well, there's going to be some hedging going on, right? Because if I can real quick get the FOMC's, what is it? The CME Fed Watch tool, right? And I want to know, is it still 70-30 for odds of a hike? No, it's 75-25. So 75% of people think that there's going to be a pause or skip. And of that 75%, which ones anticipate a pause or a skip? I think it's like 60 or 50% of that 75 block anticipate a skip. Because again, the consensus is that we'll get a skip here. And it'll be a hawkish policy speech when Powell gets up on Wednesday. And then in June, or rather July, there'll be a 25 basis point hike. But also every single other central bank has that as their consensus. The RBA, the Bank of Canada, the ECB, the BOE, except for the BOJ, right? That's still up in the air whether or not they'll actually change their yield curve control. However, I have the expectation that if the FOMC does do a 25 basis point rate hike, let's say because core CPI stays flat at this next reading tomorrow on Tuesday, then in reaction to an FOMC rate hike, they may want to do some more aggressive yield curve control at their upcoming meeting. I believe that's on the 15th, if I'm not mistaken. If I go to my economic calendar here, and I scroll down to the 15th real quick. Let's see here. Looking for Japan. Yep, BOJ interest rate decision on the 15th right there. No change is forecasted right now, but that absolutely can change in the next 24 hours. So just be on the lookout. Let's check out the Dow. Dow has had a wonderful little bounce in the last hour or so. I think the high is probably in for the day as well. Yeah, you could argue for higher highs, but I would just wait till you get close up to this level again. When it comes down to where we'll end up closing, yeah, 85% of the time you end the trading day below the R1 pivot. So if you get close to this R1 pivot again, not the worst idea. anticipating that you'll end up closing lower. But I think you had to make that decision about 3.5 hours ago rather than right now, because you now have to deal with these odds of going lower that you got to deal with. All right. Is it possible the new governor of the BOJ will hike? Yeah, there is some expectation that he's going to be on the more hawkish side, right? Because this guy is a professor, Udaya. And now, yeah, he said he's going to be cautious when it comes down to actually doing the hike. He's not going to telegraph it. So the consensus is just going to be BOJ is going to have to surprise, and then the current expectation, frankly, is sometime maybe in the October meeting, sometime at the end of the third, beginning of the fourth quarter, the BOJ will actually move their yield curve control. But that's all susceptible as to if a recession or a slowdown occurs between now and then, right? So, yeah, Udaya has a more hawkish stance, and we got to be careful of surprises in the meantime. But man, is when it comes down to yen movement and all this, is just, I mean, I could go here, bring up the yield spread. Yield spreads are still insanely positive. It's just a matter of see how we've had this great sideways movement. I think it's because if the Fed does come in more hawkish, that it's going to induce a higher likelihood that the BOJ will react. And so people are really, really, really at least before taking on more significant bets on what the Fed may or may not do, is going to be waiting for the US CPI to come out. Absolutely not a problem, Felios. Anything for you, my man. Let's see. Can we check out Aussie, the Aussie index, real quick? How are the Australians doing? It looks like they may have bottomed out for the day. Yeah, it looks like they're doing pretty well right now. Oh, something's going on with the way this chart is modifying the way the index looks. The indicator looks. I think I'm gonna have to find another. Maybe someone can help me out with this. A futures contract for the Australia 200. I need a ticker on that. And then let's see here. New Zealand 50. We should probably go to a 30-minute here. New Zealand is one of the weaker countries in the world right now. And I mentioned this yesterday that if the slowdown in China gets significantly stronger, New Zealand might be the better country to go short net than Australia. I mean, get this. The only piece of research that I got today effectively pertains completely to how dairy prices are going to stay effectively where they're at. If I could real quick go to it, actually, I'll just read it out real fast. Yeah, the summary is with Chinese dairy demand taking longer to rebound than anticipated, we have revised down our view of total dairy export and farm incomes for the 2023-2024 farm gate milk price forecast. Yeah. And while dairy prices are still at elevated levels, and maybe I should add dairy to the commodities here. Let's see here. Dairy Farm International Holdings. Let's go to futures. We want dairy. Dairy WTI, financial futures, MNI. Maybe someone has the ticker on dairy. Let's see here. Uh, let's try Farmgate. About milk. Let's see here. Powdered milk, skim powdered milk, whole milk powdered. I think we want this because see how it's a New Zealand index, whole milk powdered. Wow, check that out. That is a choppy chart. That doesn't look bullish at all. Whole milk powder futures, huh? That looks particularly bad. Yeah, that's not good. Most of Australia's export income, I believe their largest export is dairy products, dairy derived products. So it's quite important to actually follow dairy. Speaking of commodities, we got gold. Gold. Let's check out where gold is likely to close on the day. R1 is up here, so 90% of the time you're closing below R1. That's easy to call. You kind of have a wider band of where we could end up, somewhere between this R0.5 and S1 pivot, somewhere around here. So maybe it's reasonable to short around R0.5 and go long around S1, just looking at this closing distribution. And you can kind of see that's how prices reacted so far around this S1. So if we actually look at our low and our highs, yeah, that's actually quite a reasonable buy down there. The next reasonable buy is around S2. And check that out. You got a peak in your tops right around here, right off the bat, just below this daily central pivot. And then you have this chunk, this next big bump in your histogram where a lot of your tops actually occur around this R0.5 daily pivot. Alrighty, the short today on gold was over here. And if you were trading pretty much for the last 10 hours for the day, this was your buy and this was your sell. That looks incredibly straightforward. Oh yeah, milk powder is a huge important part. Let's check out crude. Crude is down 2.5% on the day. This is a huge move lower. I bet there's a threshold. Yeah, there's your threshold. So check this out. Once you're going past this S2 pivot, you're starting to deal with more tail risk looking probabilities. So most of your lows for the day occur right around here. So maybe you started to see some hope around here on this little rebound that the low for the day is probably in around this S1.5 pivot. But then it's insanely reasonable, a 30-cent stop on that. So then below 69, you don't have to deal with these tail risk odds because this down here is falling knife. I mean, buying here was the wrong move. Buying here was the wrong move. Unless you literally bought right here, and even then, there was no guarantee that this was actually going to be the low. I mean, yeah. Unless you have higher order information, like the order book on the futures or the depth chart, the order depth chart, where you can see where most of the orders lie. Because I'm just looking at the price data here with some statistical distribution on it. There's additional information you can get from exchanges that can help inform your decision as to what where some significant orders are and what some significant prices are. And then also watching the order flow come in, seeing large orders actually come in, watching big sell orders actually come in. There's additional information you can get to make more robust trading decisions. But with the information that we have here, just this little bit of thresholding where, oh wow, your likelihood of actually calling where the low for the day is gets really thin below this S2 pivot. And it's at a psychological price of 69, which is a very nice level. It seems like that is a reasonable place to be putting your stop loss. So let's see where we typically end for the day. I definitely bet most of your closes are above the current price. So let's check. Yeah, 90% of the time you get your close for the day above this S2.5 level. I don't know if, see, the problem is once you actually go this far down, you can end up just closing the day going sideways or even further down. This is falling knife territory. And unless you have additional information, for example, if we open Financial Juice and just try and see what's going on, maybe some news came out for the oil market. Sometime, let's see here, 1, 2, 3, 4 hours ago. So if I go to Commodities tab here, and this is at midnight my time, let's see here. Fighting restarts in Sudan after 24-hour ceasefire comes to an end. Oil prices under pressure ahead of Fed meeting. Yeah, so it seems like something to do with the fighting in Sudan coming back online. Let's see here. Let's see. While most of the oil belongs to South Sudan, the oil that's exported out of Sudan, the two countries together export some 132,000 barrels per day of crude oil in 2021. This has since risen to some 170,000 barrels per day. This is not a whole lot of oil, but it appears to be enough to get some traders worried about the security of these exports in a market that is getting increasingly tight in the supply department. So the sudden cut has helped drive volatility and speculation on the oil prices. There you go. See what a little bit of trade research can do to inform you about, like, oh, this seems like a pretty big move. I wonder what happened. Yeah, just check Financial Juice for a half a minute and you'll get a general idea. We did get something apparently out of the BOE real quick. Oh, ex-Fed chair, well, ex-Fed vice chair, Clarida. It may be more complicated to get inflation near 2% than in the past 15 years because of supply shocks. Huh. That's an interesting little comment. All right. Any other interesting tidbits from Clarida? Central banks showing signs of quantitative easing fatigue. Apparently, China helps Iran supply drones to Russia quickly. We got a lot of geopolitical headlines this morning, that's for sure. Japanese government looking into putting off tax increase to fund defense spending to 2025 instead of the previous plan of 2024. That's actually a huge geopolitical headline, guys. And I'll go ahead and screenshot that and put that here on the chart so you can see. And I'll remind myself and put that here on the dollar yen chart. And then also hide this real quick so we have normal colored bars. So this is the headline we're reading. Now, I don't know if you guys know what the Quad group is, but the Quad is Japan, India, I believe Australia, and then the United States. And together, they are forming this containment around the Pacific Ocean and South China Sea to militarily, or at least geopolitically right now, contain China. And I have a feeling that part of this, because recently there was a big article out of an American think tank talking about how several of the countries in the Quad are just not doing enough to make the Quad an actual meaningful alliance, or to make its mission statement effective. And I have a feeling that this is one of the things in response to that, to help make the Quad, at least from Japan's side of the Quad, more important by remilitarizing Japan. And Japan's been on a front to be remilitarized for quite a while now. It'd be interesting to hear if there are some Japanese natives who have some uh, inside thoughts around the geopolitics of what's going on in Japan. Because it's something I'm personally interested in. I don't know if it's what most of you guys are, but I'm particularly interested in it because the future volatility of the Japanese currency is something I can trade. So I am looking forward to become more knowledgeable on it to look for trading opportunities. Question: if you're look for a short on, I don't understand the full question here. What's WR? Let's see. Where mid you wait for your short. Well, I'm not shorting this right now. I already did analysis saying that I'm anticipating the dollar yen to continue this sideways motion we've been in for effectively since the beginning of June. At least until tomorrow, where US CPI comes out, where it'll be far more clear whether or not the Fed will hike or not. And I believe that the BOJ, in the event of a hawkish Fed, will become more aggressive in their timeline to do their next level of yield curve control in order to not have the yen completely devalue, another 300 or 400 pips, right? Because past 145, I think, a few people within the Japanese government has said, hey, you can't let the Japanese yen devalue so much because, past 145, it's really going to make inflation really sticky. It's really going to be a problem as a domestic political issue. So yeah. Let's see. Let's go on to crypto real quick. So the 1 hour chart here on crypto. The low is probably in looking at that. Yeah. And yeah, the high's in. Again, a lot of these charts, the analysis is actually pretty straightforward today. If you're getting close to these highs, maybe you have an opportunity for another short or a long. Another short if you're anticipating volatility to stay pretty low, and another long if you're anticipating volatility to increase as we go on throughout the rest of our day. I'd say the low is probably in on Bitcoin looking at this for the current trading day. That's what I think. And if you were actually buying around here, that's effectively what the guys on oil were trying to do, right? Because look at this, it's the exact same time, and I could do this this double pane thing here. Let's see here, real quick. We want to apply these indicators to all charts. Let's go over here, and let's go to Bitcoin. That's gold. All right, here's Bitcoin. And real quick, just switch the charts back. And let's hide some of these ideas here. So see here on the left-hand side how oil was moving sideways, sideways, sideways. Like you had this initial dump right around here in Bitcoin and gold, or rather oil and Bitcoin dumped at roughly the same time. And then they both started going sideways, sideways, sideways until you had this Sudan news hit the oil market. And then Bitcoin was actually going up. So for the traders who were doing technicals on oil, the better, and going long on that, the better asset for you to be trading actually probably was Bitcoin. Yeah, it's kind of interesting. Totally correlated from the start of the day, and then totally uncorrelated by the end of the day. Alrighty. Let's keep on going. Let's do, so now that we've done that, maybe we can do Ethereum real quick. Looks like the low and the top for the day on Ethereum's in. So let's look at where we can close the day. I mean, yeah, it looks like most of your closes today are going to be somewhere between 1740 and 1763. And I'd say most of the time you're probably just going to drift. You'll probably close in the 1750s if I were to take my best shot, right? Closing somewhere just below the central pivot or just at the central pivot here. A fairly conservative call on my end. And wow, Litecoin really has had a lot of volatility recently. Yeah, check that out. That actually probably would have been the best trade so far today. Yeah. 2.5, roughly 2.5, 2.3% move. Yeah. Best trade today probably was buying this low on Litecoin. All right, let's get into the USD CAD. And what did I say yesterday? What did I say yesterday? You know, it's almost like I plan these things ahead of time, right? It's almost like this is a channel where we plan our trades ahead of time, right? We're plan the profit. It's almost like we plan our trades ahead of time, and I timestamp my stuff and I show you what's going on, huh? So yeah, most of the time you get your low for the current trading day, roughly around here. We went just a bit further, but you know, as a dollar CAD bull, this isn't the end of the world, right? The end of the world is below this S1.5 because this is all tail risk, right? These are your huge, big, you know, red days that you really don't want to be long and holding longs into. So this here is a valid buy. This here is a valid buy. And sure, buying right here would have put you in a drawdown for, call it 10 to 15 pips. But if you're trading so tight, like with a 5 or a 10 pip stop, you have to really consider, okay, is the strategy you're using actually catching lows frequently enough where a 5 to 10 pip stop loss actually doesn't get hit and lose you money that frequently? So the frequency that you hit your stop losses on trades that would have made you money is an important thing to try and understand before trying to implement a particular strategy's risk management. Don't get me wrong, there are definitely some trading strategies out there that do exactly that. Where, I mean, in all seriousness, though, those trades, their expected value profit every day is somewhere between 2 and 8 pips on every single day. And even then, if your profit's so tiny, 2 to 8 pips, exchange fees and spreads can really eat into that and make the profits fairly insignificant. So just be wary of trades that, you know, require profits or stops of such small size, right? That's when you start getting into the high frequency trading sort of strategies, and where you really should, you know, at that point when you start discussing those types of strategies, you really got to start doing your Python, your R, your Rust, your C++. You really got to understand volatility. You got to understand a lot of the stuff that I'm talking about. Can I analyze the bond market? Sure. How about TLT, right? So this was a great expectation for the day ahead. That was a great expectation for the day ahead. Let's go ahead and do that. Let's look at TLT. I'm actually quite interested. I had TLT right here. Just stuck it right here in the National Equities Indices section. Maybe I can get a future for this. Actually, why don't I just pull up yeah, let me pull up something else here. Let's just pull up the US 10. So this is the 10-year bond for the United States. Huh. It doesn't seem like this indicator likes the units. So the particular units, where it's using these kind of quotes, it doesn't seem like this indicator likes these units. Oh, let's go to then the yields. The yields should be fine. Unless maybe there's a problem with gaps. Let's see. No, everything looks just fine. Some visual problems, but the probabilities are still there. I mean, I would anticipate the low for today to come in just above S1. Yeah, I would expect the low to come in just above S1. Let's try a 30-minute chart. See how that looks. Yeah, still roughly the same odds. So getting your high roughly around R1 and your low around S1. And that's standard sort of pivot point theory, range bound trading market. I think for bonds, at least this sort of trading data, you probably want to be looking at it for the whole week. So let's go ahead and check out how the week looks. Let's check out that. Yeah, something's going on with this high data here. I don't know exactly what. But as far as the low data is, that's how it's supposed to look. That looks quite obvious in all seriousness. So if you're anticipating lower yields sometime this week, you most of the time get your low for the week on the 10-year yield, US 10-year yield, somewhere here between S0.5 and S1. And then the next most likely area you get your low for the week is between S2 and S3. Yeah. So this here is kind of no man's land, where sure, you can try and take a shot, but you have very low likelihood of actually picking a low. So this isn't exactly like a falling knife, but I think no man's land is a good way to characterize this area here between S1 and S2, because you have very little probability of actually catching the low, and it's in a what you would call a bimodal histogram, a bimodal distribution, where you have two peaks in your data, right? We have a lot of our lows for the week ahead of us occurring here between S0.5 and S1 on the US 10-year yield, and then another peak in where most of the lows occur between S2 and S3. So these would be the downside risks, and I think that's actually quite useful information. I'll have to see what's going on with this high data, because this doesn't look like it's, displaying properly. But I'm pretty sure I can finagle the settings to get it to print exactly the way I want it to. But I'm going to try and actually work hard on further developing the indicator out. So this indicator works automatically and flawlessly without any changes to the settings on 90% of charts. I just got to figure out what the exceptions are, some trading view bugs maybe. Yeah, that's just stuff that comes with time. And in the meantime, you can kind of finagle the settings to get it to load right. Or you can load other alternative charts of the same data that might not have the same problems with the prints. I don't know. We'll see. We'll see as time goes on what the recommendations are for those little graphical fixes. The good part is that it's calculating probabilities correctly, and that, frankly, is the most important thing. As far as where we'll end this week on 10-year yields, US 10-year yields, it seems like most of the time we get our closes in one of two places. So kind of another bimodal shape here, you see, where we have a peak in our histogram right around here between S0.5 and S2. So you have a decent number of your closes. So I'd anticipate that if you're anticipating a bearish trading week ahead of us, that the close would be anticipated to come in somewhere between S0.5 and S2. And don't get me wrong, that's quite a big range, and that's incredibly general. And someone without this distribution could easily say, if you're anticipating a bearish week ahead of us, you'll probably close at S1 or below by the end of the week. That's not a particularly revolutionary interpretation, but to be able to point out, 13% of the time by the end of this week, the US 10-year yield will close between 3.688 and 3.630, 13.84% of the time, to get very specific with the probabilities and the exact price range. That's another higher order of analysis. And then if you're expecting a bullish trading week here on US 10-year yield, somewhere here between R1 and R2, it looks like where most of your closes occur for the upside for the bullish trading week. This is going to heavily depend on how FOMC plays out, to be frank. So if FOMC comes out hawkish, that's going to send these yields up higher. And if they come out dovish, that's going to send these yields lower. At least that's my naive initial best guess. I could be totally correct because I've been doing this for a while, but sometimes markets do weird things around incredibly volatile events like FOMC and CPI, so it's worth to be cautious sometimes on what you expect the immediate reaction to be. But that's my initial naive expectation going forward into the end of the week. Okey-doke. Let's check out euro dollar. Oh, we hit it. We hit it. Oh, man. Did I miss out? Don't tell me I missed out. Oh, no. Oh. No. Oh, no. Oh, man. I sure hope that it goes higher sometime tomorrow. Oh, please go higher. Oh, that was such a good spot to take a short just here below R 1.5 and to have the stop right there. Oh, man. But I'm going to keep waiting. I'm going to keep waiting till price actually goes above 1.8. Otherwise, I'm going to be waiting to get short euro dollar after the CPI print actually comes through. Oh, man. Yeah, I sure do hope I get the opportunity here to get a short. Oh, actually, I need to update this because that's supposed to be the correct size. I believe I went over this already. I mean, I went over it in the trading group, that's for sure. But I believe I already showed this for people who watch the macro stream. So just a little review why I'm so excited. I'm using pivot probabilities now, so this is a different indicator. Oh my. Do you see that? Do you see that? This happens way too frequently for me to justify actually advertising this without sounding so scummy. It hit the probability weighted pivot high. Exactly. Oh my god, dude. Right at the beginning of the weekend, I missed it. No, this is what I get for not having alerts on, right? This is what I get for not having alerts on. I need to sip of tea. Oh god, I hope it comes up one more time. Oh, I hope it comes up one more time. God, yeah. So the high came in at 1079 and the probability weighted pivot right now is at 107884. Yeah, okay. I'm sorry for the 1.5 pips of inaccuracy for calling the top for the week so far. That is if the top for the week is right here, right now. And that's genuinely not out of the question. Especially if go because you know what, we already have pretty bearish expectations on euro dollar because so many of the outlooks that we were reading yesterday were talking about exactly that. The expectation for the ECB to do its rate hikes is effectively already priced in, and that any sort of movement that Eurodollar has is almost entirely dependent on the US dollar portion of this. So, unless US core CPI comes in meaningfully lower, that might just be the top for the week. I mean, I hope it's not the top for the week because I want a position to short this thing. But at least I was very responsible yesterday, or in my last stream where I was able to buy here on dollar CAD. But look, you got another opportunity today to go long dollar CAD. And I was thinking about taking some of the additional margin I had available to buy right here, and I realized, I really should try and be a little more conservative. I think I'm going to regret saying that. I think I'm going to regret saying not buying down here just on today. I think I'm going to end up regret that. But if I were to add again right now, I'd actually feel quite okay about it. Real quick, looking at the daily close odds, those are the weekly close odds. Real quick. I mean, here's one of the big benefits with range probabilities is a lot of people already are using pivot probabilities, and a lot of people have been using pivot probabilities for a few years. It's an indicator that's been around for 3 years now. There are some pieces of information pivot probabilities doesn't take into account that range probability does, and vice versa. There's information from range probabilities that it doesn't have that pivot probabilities does. So, like I said in the last stream, range probabilities is a Bayesian approach to statistics, and pivot probabilities is a frequentist approach to the statistics. One of the problems, though, with pivot probabilities is that you can't bring it up for daily pivot points. Now, you can still use it to help with making day-to-day trade decisions, like I just showed on Eurodollar here. Oh, this is gonna really kick me in the butt if that's the high on the week. Oh no. Oh man. Yeah. Well, let me just move on. All right, let me just take another cope sip. Let me just cope a little hard. Oh wow, we'll probably end up closing right up here today on Aussie dollar. Quite a strong move out of Aussie dollar today, huh? I didn't say anything in the news today come out of Aussie dollar. But, I mean, this looks like an incredibly obvious trade plan. And today's the 12th. So that's the trade plan for today. We'll most likely just end up going sideways. Oh yeah, New Zealand. So New Zealand had a nice little bump up. It's been going up and up and up these last 3 days. But the macro outlook is still not particularly fantastic. Yep, that was a good short. Shorten that R1. I mean, a lot of people who trade pivot points, you have an expectation going into the day of how it's going to turn out. And if you're wrong on those expectations, you're just going to lose the trade. But at least in having something like this so you can have a bit more general information when it comes down to the day-to-day trade plans on what pivot points are important thresholds for going to super high levels or for topping out that have likelihoods of reversal, and actually having those probabilities for the likelihood of reversing, right? Because I can go right here and say, oh, 65% of the time, the top for the day is below the R1 pivot point. So going short right here, if I'm putting my stop loss like at that R2 or that R1.5, I can then look at my probability of getting hit and determine, oh, if my probability is super high that I get stopped out, or it's too high for me personally, I could de-risk my sizing. But if I have a really small sizing, I don't make enough money. Or if the probability of me getting stopped out is super low, I might want to be a bit more aggressive depending on how far that stop loss is. Or you have here's another interesting way of using these statistics. So how I keep mentioning like these tail stuff here, like, oh, you don't want to be trading up here and you don't want to be trading down here. Well, if you're going into the trading day with the anticipation and expectation that there's going to be a lot of volatility, I mean, you can just say, oh, if there's going to be a lot of volatility today, and it's going to be a super, big green or big red trading day, you can target these R2 and S2 pivots and anticipate the break of those pivots and say, oh, if we actually do get this very big volatile trading day realized, going long here, anticipating the thing just to go up for the rest of the day, or going short here, anticipating the thing just to go down for the rest of the day. Yeah, not the worst. It certainly wasn't the worst idea in the world when trading COVID, or actually way back here on New Zealand, because I was building this indicator around here, and I got the short here, and I got the short here, and yeah, made, this was like 300 pips. No, it was like 200, 250, somewhere in that range. Because I had some from up here and then some from here, so my net position was a little more than people who were just going short right here. But yeah. And I got all those trade plans and that whole history of that analysis in the trading group. So if you guys want access to these indicators, to one-on-ones with me, to the trading group, to the channel with all my trades and the things that I'm looking at, and then also a forum for group trade plans just for guys with these indicators, go to the description, find the WAP link for boss benchmarks, and join for $100 a month. The trading group plus indicators, and that's actually much more affordable than what a lot of other people are charging. And yeah, that seems like that's the whole spiel. That's just about everything I need to say there. Pound dollar is just getting hit super hard. Is there any news going on with pound dollar? Let's see here. Europe weekly wrap. BOE's Haskell. Further increases in interest rate hikes cannot be ruled out. Okay. I don't see. Yeah, I don't see anything. Oh, what's going on with this? Why is this all the way down there? Yeah, see what I mean? Sometimes just the data on the chart. So this is what I mean by getting finicky, right? And by the way, 2000 is fine. We don't need to do that. See? So obviously there is some bit of data like all the way that far back changing. That was just such a tiny change to the settings, and now the thing loads properly. I'm just like, I'm racking my head going through all the code trying to figure out what are the little bits of information that are causing that little graphical issue. Because I think it's calculating probabilities correctly. It's just that I'd like it just to be automatic. automagic, right? Automagic indicators. You just put them on, and they tell you exactly what you want them to do. So yeah, if you wanted to be a bull, now is like the last call if you think this is going to be the low for the day. Otherwise, past this S1 pivot, you're going to be targeting this area right here. So you're already kind of beginning to cross the threshold. I don't know. I'd say once you're past 1.255, once you get past 1.255, you're dealing with the risk of going to the next likely area for where your lows come in for the day on pound dollar, which is this this S1.5 to S2 range. Let's try with 5,000 simulations. See if that changes the shape. I'm pretty sure, yeah, that's 5,000 simulations. So we can do both. Oh my god, it already ran the it already ran the 5,000 simulations. This indicator's fast, man. And it didn't even change the distribution at all. Which is very, very good to see. It means that, yeah, that's fine. But the reason why you'd want to maybe use less simulations is so that the indicator loads as quickly as possible, but you can see the difference between 2,000 and 5,000 simulations is just the more simulations you run and the more look back data you have, the more representative the histogram is actually going to be of the data you're looking at. And this is the low data, so this is saying, oh, you got your peak and your lows for most bullish trading days right around here, and this is probably your low for most bearish trading days. Yeah, so I'd be on the more cautious side once you cross 1.255. Let's go ahead and mark that up. And let's put a red line there. 1.255. And type in bearish threshold. Reduce the size of that text to that. And let's get an arrow. Something like that. And put in our timestamp. And let's also put a timestamp on this one here. Okay. That's that. We'll come and check up on this tomorrow if we cross the threshold sometime today. I'll check it up on tomorrow's daily stream. All right, let's check out the stream, see how you guys are doing. Wow, the chat's been incredibly active. This has probably been the most active chat I've ever had. Thank you guys for interacting in the chat so much. Wow, yeah, high, very high chat rate. And quite a lot of views, quite a lot of good concurrent viewership. The channel is growing. The channel is growing, and that means you guys are sharing these videos around. I absolutely appreciate that. Thank you guys so much for watching. And I'll go ahead, say goodbye. This is pretty much everything I wanted to cover today. Thank you for watching. I've been your boss, Joe Boss. And I'll see you guys in a bit.